Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Tuesday, November 16th, 2010. Well, folks, a monster decline on Wall Street today following more worries from Europe, the dollar again soaring to the upside. We're continuing to see our cycle date pivot play out to the downside. All of these factors making for some good money accumulation and wealth building in the research center and in the intraday stock chat. Scalping has been quality. The swing trades in the research center have continued to pay off beautifully, again, as we positioned ourselves over the last few weeks and month or so to take advantage of this down move coming, and again, that has now come to fruition. And again, I moved out of a bunch of plays today. We'll go over them. Here's the 60-minute chart of the SPY. First, we're just taking a look here. Notice this little pivot low right here. This is exactly where the markets have stalled out, right underneath the 118 level. Beautiful little pierce of this 118 level down to 117.75, and the bounce has come back. Today, again, you can see how these two trend lines, this blue trend line and this yellow trend line sloping, these could not be broken. If I zoom out a little bit, take a look. This yellow line got hit, finally got broken yesterday, and look at the collapse that we've seen here now over the last couple days. I mean, truly amazing to see this kind of collapse type atmosphere over the last couple days in this market, and really over the last week. 1 week ago was our pivot cycle date, and again, right here, it topped out. Now, what's the cause of this? What's driving this market to the downside? Here's your intraday chart, by the way. By the way, folks, making a little in spirit of bullish pattern right here. I do expect a little bit of a pop in the short term to this 20 moving average, but we'll again watch for this towards the later session and see how it plays out. But again, bottom line is this, folks. Obviously, the cycle dates are extremely accurate. 85-90% success rate on those. That, again, told us that last Tuesday was a top in the market after it pierced that little pivot high. But the other factors have to be looked at. You had such a major run-up on POMO and propping of the markets and the dollar getting pounded and speculation on QE2. Now that's all out of the way. There's nothing left to keep the market up. The market's looking for some positives, and it has nothing. In fact, it has negatives. You have China possibly raising interest rates. That caused a 5% fall late last week in China that decimated the markets last Friday here in the United States. Then you have issues in Europe. Ireland is basically defaulting here. Looks like they may need a bailout. You have Ireland and Greece and all these other things spreading again. It's the contagion over there. That's creating a major drop in the euro right now. A major drop in the euro, which is again powering the UUP up. Take a look at the dollar today. Dollar continuing to advance higher and higher. We're near the 23 even number resistance point on the UUP. And again, when the dollar goes up, it kills commodities, in which case it kills commodity stocks. All right, so remember, stocks like ExxonMobil, Chevron, Southern Copper, Freeport-McMoRan, all these stocks are getting hammered today and over the last few days because commodities have been going down on the back of a stronger dollar. So all this is coming together to form some major issues here. Not only that, folks, but you are seeing options X activity. The market's been rallying so much of late. You've had a lot of longs accumulating long options or calls going into this week. Institutions are saying not so fast. We're not paying off those. We're going to punish this market to the downside. That's exactly what's happening in the first part of this week. Now, whether or not it continues into Wednesday, Thursday, Friday of Options X, maybe they flushed out enough longs at this point where they want to now take the shorts money over the next couple days. We're going to continue to watch and see how that plays out. It could be either or. But again, the important thing to remember is the manipulation is a factor here. You have to understand the options expiration week that we're in right now. And again, options expiration week playing off of the turn cycle to the downside. They're obviously flushing out the longs in this move to the downside. Now, let's go back to the SPY and just touch on a few other things. The SPY, again, basically hovering at the lows of the day, down $1.90. The Dow right now is down $1.84. NASDAQ is down 41 points. S&P 500 is down 19 on the day. So, again, a major drop in the markets. Basically, 1 2/3% drop on the indexes out there. A couple stocks are weak today, extra weak I should say. A couple stocks are actually stronger than the overall market. We'll talk about those in a little bit. Now, next what I want to do is just touch base on the pattern formation here. You have a 1-2 pivot double bottom right here. So there is definitely support right here at this 117.75, 118 level. And again, market continues to stay above. You're now creating a little bit of a bullish pattern right here. See this up green candle, 1-2 bar consolidation? That's a little bit of a bullish pattern. We'll see if it plays out in a little while. Any sort of pop should take you to the 20 moving average. We'll follow that again. And again, after that, it could come right back in. This market is extremely weak. Beautiful volume today. A rare case where we have a lot of volume. 175 million already traded in the SPY. We didn't do 175 million yesterday or the day before or the day before that really in this market. Maybe last Friday we did 175 or so, but that was for the entire day. You're on pace to do about 250 to 300 million today in volume, which is fantastic to see. And again, anytime you have good volume, the markets seem to be down, and that tells you institutions are unloading, but they're not buying. When the markets float up on light volume, they're not being buyers, they're only being sellers. And again, that's why you have the big volume to the downside only. Daily chart, here it is, folks. Here's your daily chart. Notice the pivot double top from April got taken out just by a little bit. That's enough to flush out the weak short hands. Once the weak shorts are out, then of course they'll drop the market. And you can see that tumble down here. There's a support line right here. You can see right with this pivot top, that's exactly what you're coming into. All right, again, very nice selling going on in this market today. Again, whether or not it holds up for the whole day or do we float sideways to up for a portion, it really probably depends on more the volume and such. Now, some speculation as to a few different things here, and I want to bring this up. I think this is a very fascinating point. We discussed it in the intraday stock chat today, which was why when POMO, QE2 is now underway, which is basically POMO, Permanent Open Market Operations by the Federal Reserve. Why is that not propping the market up right now? And this is my speculation on this, folks. And again, it was talked about in the intraday stock chat today. Fascinating stuff. Think about this. The Federal Reserve does POMO. What do? They basically go to the banks, the large institutions, and buy treasuries. They buy treasuries, so they're taking on the treasuries. They're giving cash in exchange, and though that cash is going into these large institutions. Now, the institutions have a vested interest in not paying off all the calls in this market. All right, they have a vested interest in not paying off all the calls in this market because then they make the full premium that they sold the call for. So if they have the option to put the money to work from POMO or not, they may be holding back so far as to wipe out a lot of these call options. All right, think about it. It makes sense. So again, the money goes into these banks. The banks now, the large institutions are supposed to put the money into the market, although I'm sure they've agreed with the Fed, oh, listen, give us a little bit of a pullback here. We don't want to pay off all these options that are in the money on the call side. Let this market come back down. We'll use this money next week into the Thanksgiving week to really pump the markets up, possibly going into that holiday shopping Black Friday day, the day after Thanksgiving, to really get things up. But right now, let the markets fall. We'll keep this money on the sidelines, and we'll put it to work coming later, either this week or early next week. And that's, again, giving you the non-POMO effect, even though technically the Federal Reserve is doing POMO. They are buying treasuries. But again, it's up to the banks and the institutions to put that money into the markets. And if that's not happening, then again, down we go. And sure enough, that's exactly what's gone on basically since our pivot cycle date last Tuesday, again, when the market topped out. A week later, here we find ourselves. The markets have dropped 4.25%. We called for a 5% correction. So far, a 4.25%. It's kind of nearing that area where it becomes gray. You don't know if you'll get that full 5 or a little bit more than 5, or if they'll just bounce it up here off of these levels. Again, I wouldn't be surprised, I guess, if we were to drop down to about 115, but I wouldn't think more than 115 would be a move below. I'd be surprised if that were the case. All right? So just be aware of that, folks. We're going to continue to keep you guys updated and fully informed. You must go to the Research Center and sign up to get this information. Swing trades today, let's talk about them. LVS. Took the rest of my position in LVS off the table today, and I notified the Research Center to do the same in the chat room. Again, the short was put out at $52.02. It is now trading at $46.50. Talk about over a 10% short gain on LVS. Unbelievable. In addition, I also moved out of GLD here. GLD has had a bounce after I moved out of this on the short side. Beautiful little trade right there. Although, again, just made a little bit on that trade. And, again, a couple of the other ones. QID, we had QID from $12.60. It hit a high of $13.27 today. Beautiful move up. So, again, these are all Research Center trades. You want to get involved so you're making the money. Bottom line is, if you don't know which direction this market's moving over the next week or two, you got to be in the Research Center to know that, so you can position yourselves or be safe or whatever you have to do to make the money that you need to make and continue to build. Because remember, the more inflationary pressures the Fed and the more money the Fed prints and floods the market with, the less your money is worth. You have to combat it by being smart and trading your money on a swing trade basis in the very least, or investing correctly. You don't necessarily have to be a day trader. Day trading is tough, not for everyone. Not everyone has that time. But what you need to do is take advantage of the moves in the market, position yourself accordingly, and make that money to offset the inflationary pressures that, again, will eat away your real buying power in this market. All right, let's go back to the SPY quickly here, folks. Again, market coming back in a little bit. You can still, as long as you don't take out the bottom of this green candle portion, you still have your in spirit of bullish pattern there. But again, we're coming right back down into this level now, and you can see the market's just dumping back down. Still hasn't broken out. If you take out this 117.75 level, your next target, I'll give it to you guys right now. Your next target for the afternoon, this will be a beautiful swing scalp, or at least a day trade scalp right here, will be this pivot low at 117.25. 117.25 will be that level, all right? So be aware of that. Spider's bouncing up a little bit on the intraday again. I still think this level has a decent chance of holding, but the more it hits on the downside, the more likely it breaks through. So keep an eye on that. Again, we will be trading it accordingly in the intraday stock chat. Join the Research Center. We've already put out many alerts via text message and email today, which again, if you sign up for the Research Center, you can get text message and email alerts every time something changes and something new is posted, a new trade, a new profit, a new pro trader watch list, hot chart and alert, or anything else that again we post. Have a great rest of the day, folks. Again, join that Research Center. We'll see you soon.